In the world of digital currencies, a crypto exchange is like a bustling marketplace. It's where people buy, sell, and trade cryptocurrencies like Bitcoin, Ethereum, and countless others. But what exactly goes on in this vibrant space? First off, think of a crypto exchange as a bridge connecting buyers and sellers. Just like a stock exchange, it provides a platform for users to trade their digital assets. Users can create accounts, deposit funds, and start trading in a matter of minutes. There are two main types of exchanges, centralized and decentralized. Centralized exchanges, like Coinbase or Binance, act as intermediaries. They handle transactions, provide security, and often offer user-friendly interfaces. However, they require users to trust the exchange with their funds and personal information. On the flip side, decentralized exchanges, or DEXs, like Uniswap and SushiSwap, operate without a central authority. They allow users to trade directly with one another using smart contracts. This means users maintain control of their funds, but it can also come with higher risks and a steeper learning curve. When trading on these platforms, users can engage in various activities. Spot trading is the most common, where users buy or sell cryptocurrencies at current market prices. Margin trading is another option, allowing users to borrow funds to increase their trading power. This can amplify profits but also increases risks, so caution is key. Crypto exchanges also offer features like limit orders, which let users set specific prices for buying or selling. This can help traders maximize their profits or minimize losses. Additionally, many exchanges provide advanced tools for technical analysis, helping users make informed decisions. Security is a hot topic in the crypto world. Centralized exchanges often implement robust security measures, like two-factor authentication and cold storage for funds. However, they can still be targets for hackers. Decentralized exchanges, while offering more control, can be vulnerable to bugs in smart contracts. Fees are another important aspect to consider. Most exchanges charge trading fees, which can vary based on the platform and the type of trade. Some exchanges also have withdrawal fees, so it's wise to read the fine print before diving in. In summary, crypto exchanges are essential for anyone looking to get involved in the world of digital currencies. They provide the tools and platforms needed to trade, but it's crucial to choose wisely and stay informed. Whether opting for a centralized or decentralized exchange, understanding the ins and outs can lead to a more successful trading experience. Thanks for watching the Crypto Academy 101. Don't forget to like and subscribe to the channel. See you in the next video.